This is Money Talk on News Talk 580 CFRA. Here is John Budden.
Good afternoon, folks, and thank you for joining us on Money Talk. Here's the lineup for today's show. We start with Dave Sally of the Ottawa Business Journal, then go to my weekly chat with Matt Hendricks, who is Senior Vice President, National Sales at Sprott Asset Management. After a break, Kevin O'Leary, Chairman of the O'Leary Financial Group, joins our affiliate BNN and discusses the implications behind the FBI's decision to open the Clinton email probe just before the U.S. election. After the news, Scotiabank Chief FX Strategist Sean Osborne discusses why Stephen Poloz, the Governor of the Bank of Canada, is adding volatility to the loonie and why he sees oil's correlation strengthening soon and his outlook for U.S. Fed rate hikes. Then, too, Satish Ray, who's Chief Investment Officer of Public Markets at OMERS. After a final break, we conclude today's show with Andy Bush, who's a political economist at andrewbush.com. He joins Catherine Murray of our affiliate BNN to take a further look at the FBI's decision to reopen the probe into Hillary Clinton's emails. But first, let's go to Dave Sally of the Ottawa Business Journal. I'm joined this afternoon by Dave Sally of the Ottawa Business Journal. How are you, Dave?
I'm not too bad, John. How are you?
Okay, just getting ready for Halloween. Now, Dave, a leading global video surveillance company based in Canada says it's ready to make significant inroads in the Asian market, while a major local developer broke ground on a long-awaited project on Spark Street. And one of the city's biggest tech names says its profits rose in the third quarter.
That's right, John. Well, let's start with Canada's March Networks, which stepped back in the spotlight this past week after keeping a low profile for the past several years. The Canada-based firm, which makes video surveillance technology, was acquired by Chinese holding company Infinova in 2012 for $90 million. Since then, it has been quietly staying under the radar. So much so, in fact, that CEO Peter Strom recently joked with OBJ that people's response when they ask him what he does is often, "Oh, really? You guys are still around?" And indeed they are, John, and Mr. Strom says March is ready to make a splash in the Asian market. The company, which is run as an independent subsidiary of Infinova, recently opened a sales office in Singapore. That helped it land a deal last year with PVCom Bank, one of Vietnam's fastest-growing financial institutions. Mr. Strom hopes that's the first of many new deals for March in the rapidly growing Southeast Asia market. March, whose major clients include Walmart, as well as 4 of the top 5 Canadian banks, has devoted much of its R&D efforts recently to developing new products to complement its existing surveillance equipment. They include software to monitor and analyze point-of-sale and ATM transactions as a means to weed out fraudsters. March is also preparing to launch a subscription-based service aimed at small businesses that can't afford to shell out thousands of dollars in one fell swoop for security equipment. Mr. Strom says the subscription model could be a huge growth opportunity for March. The company currently employs about 270 people worldwide, including 155 at its head office in Canada, and has annual revenues of more than $100 million.
In real estate news, Ashcroft Homes is finally putting the shovels in the ground on a downtown project that's been 10 years in the making.
That's right, John. The condo development is located between Sparks and Queen Streets, just west of Metcalfe Street. The NCC is leasing the land to the developer, but negotiations have stalled several times over the years. The project, called Re-Residences, was originally slated to begin in late 2011, but red tape delayed the launch until this past week. The development is expected to include 2 buildings with a total of 92 condo units and 110 luxury rental suites. The site also includes space for a fine dining restaurant on Queen Street and 6,000 square feet of retail space along Spark Street. The project is slated to be completed in 2018, and Ashcroft President David Chu says more than 70% of the condo units have already been pre-sold, including buyers from the first sales period whose original prices will be honored. He says he hopes the development will help revitalize Spark Street, which has often been criticized for failing to live up to its potential.
And finally, there's good news from satellite communications company Telesat.
That's right, John. The Gloucester-based company reported preliminary third-quarter net income of $15 million on Thursday, thanks in large part to a favorable shift in foreign exchange rates. Telesat said it expects to record revenues of $224 million in the three-month period ending September 30th, down 7% from the same period in 2015. The company benefited from a stronger U.S. dollar and saw an increase from U.S.-denominated revenues. It attributed the overall decrease in revenues to the end of short-term services provided to another satellite operator in 2015. Overall, the company's bottom line is expected to improve dramatically from the same quarter a year ago, when it suffered a net loss of $139 million. Telesat attributed that turnaround to a reduction in loss on foreign exchange, offset slightly by higher depreciation expenses. Adjusted net earnings are expected to be $186 million for the quarter, a decrease of 6% from the same period a year ago.
And Dave, what's on the OBJ's radar for the coming week?
We've got GTech coming up this week at the Shaw Center. That's the annual trade show where technology exhibitors get a chance to show their stuff to the federal government in hopes of landing lucrative procurement deals. A host of local and international companies will have a presence at the event, which runs from Tuesday to Thursday.
Well, thank you. That's a great update. We'll talk again next Sunday at 2 p.m., and have a good weekend.
You too, John. Thanks.
Now to my weekly chat with Matt Hendricks of Sprott Asset Management. I'm joined by Matt Hendricks, Senior Vice President, National Sales at Sprott Asset Management. How are you doing, Matt?
I'm doing very well, John. How are you today?
Okay, and then you're getting ready with your gang for Halloween, I would guess.
Yeah, a birthday party this weekend and then Halloween tomorrow, so busy time.
Well, let's try and figure out what's going on in these markets. We've got some major change taking place. It looks like fixed income, that is interest rates, are moving up in spite of the Fed not raising rates yet. And that's not just U.S. Treasuries, but it's also the German 10-year Bund, which is a very important rate for European markets. And then equity markets were down on the week, and we had a scare on Friday because the head of the FBI is relaunching the probe into the Clinton emails, and that has created some more uncertainty ahead of the election. And I wanted to go over good defense because given everything that's going on, that has to be the focus of a portfolio. So I thought I'd start with the fixed income strategy, which is proactive at Sprott Asset Management, and you might just give us a snapshot of that.
Sure, John. Definitely rates have been and will continue to be an issue, and we are very well positioned at Sprott. There are tens of billions of dollars in Canada in what we call these long-only, long-duration bond funds, which are about to get creamed. It's like the Titanic heading for the iceberg. The average duration is 7 and 8 years because the managers have had to go out that far just to squeeze 1.5% for the unit holders. And now the capital gains are all out of these bonds. As I say, the positions are so big that it's not as if the fund manager can change the position 5% without causing a shift in the bond market. So I fear for everyone out there that has what we call a long-only, long-duration bond fund. And again, the numbers, I want to say $300 billion in Canada is sitting in this money. At Sprott, again, Scott Colburn, we've got global unconstrained mandate, meaning he can go long, short, he's tactical, and we have an unbelievable suite of alternative income products which have been doing nothing but adding great value to our unit holders. So if you are in these bond funds, I highly suggest you talk to your advisor. It's time to get out.
Now, you had John Wilson, who manages the enhanced strategy here in Ottawa during the past week. And I think it's important to relay the message because it is very defensive and a lot of people are trying to knock the ball out of the park. And John plays singles and doubles. And when we get a market event, his strategy is a strong one. And so if you could give us some of his comments.
John runs a mutual fund portfolio, but it's considered to be a hedge strategy because he's got a level of protection in there. And to be quite honest, in the last 18 months, globally, the sort of quote-unquote hedge fund managers have been taking it on the chin because it's been so impossible to manage money when there's been massive sector rotation, there's ETFs, high-frequency trading, central banks coming out and basically the market's trading on what central bankers are saying. So these traditional hedge fund guys have been underperforming in the last 12 to 18 months. And John certainly has felt some pain. But the long story short is, again, we're at market tops here. We've got a U.S. election. We've got so much uncertainty. I believe we're going to have a 25 basis point rate hike in December. There's really no way the Fed can back out of that. So you certainly want to have a fund manager that has exposure to the markets if things are good. But more importantly, if things turn sideways on a dime, and they certainly can in this business, 1987 is a huge example of that. You want to have somebody that has got defense on the field, and the enhanced equity strategy certainly does that.
Now, Matt, let's talk about the Nortel factor.
Yeah, sure, John. So Nortel has been in the news again recently. There's thousands of Nortel pensioners and former Nortel employees in Ottawa that have recently received packages giving them to the end of the year to choose between how they want to deal with their pension assets. One, basically get a non-indexed annuity monthly payment, and two, get a lump sum rolled into a life income fund. And if they do that, their money will be leaving Nortel, and they'll be having to find an advisor to look after that for them. Now, I've been dealing for the last 7 or 8 years with a very experienced team here in Ottawa called IR Financial, and I've gotten to know them very well, and they have put together a really good white paper and a questionnaire on this subject, and I highly recommend that if anyone out there is listening and has this choice, you go to nortelchoices.ca. That's nortelchoices, all one word, .ca, or you can simply call them at 613-569-7020, 7020. And you can register, fill out, and read the white paper. And they're planning on doing 2 or 3 seminars in November to basically help folks identify what the best decision is for them. And again, it's free, and the value add, in my opinion, is tremendous.
And Matt, for listeners and advisors who would like to get in touch with you directly, give us your coordinates.
Sure, John. I'm always reachable toll-free at 866-299-9906, and always available at sprott.com.
And good luck with Halloween, and we'll talk again next Sunday.
Well, let's hope the markets don't spook us too much this week, John.
Stay with us, folks. After the break, Kevin O'Leary, who's chairman at O'Leary Financial Group, and he discusses the implications behind the FBI's decision on Friday to reopen the Clinton email probe. You are listening to 580 CFRA.
You're listening to Money Talk on News Talk 580 CFRA.
All right, back to our top line conversation right now. U.S. stocks did tumble to their lowest level on the day in the wake of the surprise development for the presidential election campaign, the FBI reopening its probe of Democratic presidential candidate Hillary Clinton's emails. For more on this, we're now joined by Kevin O'Leary, chairman of O'Leary Financial Group. Kevin, what a day it is. My goodness.
Intriguing, no question about it. Obviously, let's start with just laying the landscape. Both of these candidates are deeply flawed in their own ways, obviously. And this email issue, many thought had been put to bed in July. So the assumption right now, obviously, is that there must be something very material for the FBI to open on. But more importantly, if you think about strategy, and I want to talk about this from 3 different perspectives. Number one is, what is the Clinton inner circle going to do now? Because this is obviously very damaging for the next 48-hour news cycle, because in the state of Florida, a very important state, a huge amount, millions of pre-election ballots are going to be cast over the weekend. If you look at how Florida votes, it does a tremendous amount over weekends, and this is one coming up. So this news cycle is not helpful for Hillary at all on the undecided ballot. So within her campaign now, and this is semi-speculative, but I've got some pretty good sources on both sides, because this is always intriguing to me. I love to look for the economic impact of each policy set, and so I'm going to talk about what this might mean to us in Canada in a minute. But what they're really thinking about right now, and she's speaking, and she hasn't brought it up yet because they haven't made up their mind, they're thinking about being proactive and actually going to the FBI and asking them to disclose the data early so that she can address it, because we don't know how material it is, and it's probably more damaging to have it sitting out there. So let's say you're an American voter. You ask yourself, do I put in a candidate I don't like in Trump, or do I put in one that could be indicted after she's elected, putting a tremendous amount of pressure on the presidency itself. So that's a huge cloud. Wouldn't it be better to accelerate this information and clear it if we could, or at least have the voter understand the probability of an indictment? Because she would be, if she got indicted and lost that prosecution, she would be impeached again. That's all bad. And so, and I can see the thinking. Now, you can imagine she's not going to bring this up in this speech because they haven't made up their minds yet.
Well, right, and they probably haven't had enough time to kind of really figure out what the right strategy
No,
would be.
but when you're talking about a matter of days to the election, you have to think
fast,
very fast. And this dialogue is going on within her camp,
sure,
because it makes a lot of sense to do that. If the FBI is willing to disclose to her on a one-on-one what exactly this email or these emails are. This is not the same as before, and it's not necessarily tying, the cloud of the pay-to-play with the Clinton Foundation, the paid speeches, but it raises another big issue that has been troubling to many people. In '99, the Clintons were broke. They self-disclosed that. Today, they're worth over $200 million. Can you make enough speeches to make $200 million after tax, which is basically $400 million of income? Or how did they do that? And I think that's sort of on the minds of many people.
I don't know that it is on the minds of many people.
Well, it is now.
Well, why? Just because of today's news? I don't necessarily think so.
Because you're going to hear a lot more about it.
Maybe you will, but I don't think that we've heard a lot about where they were financially in 1999. To your point, they didn't have any money.
Watch the news cycle in the next 2 hours on this topic, because one of the speculations is that this email will tie. The fact is, all this speculation is bad for her. There's nothing good you can say about this helping her right now, which is why I kind of agree with this theory within her camp. Get it out. Flush it out. Clearly, we've learned something about this election cycle, that there's nothing you can hide for both sides. The sex tapes and the allegations and the crying women and all this stuff is open to social media, and now you, Catherine, are trying to absorb this data as it comes in by the hour.
Well, but I don't think that if you look back, that people really cared about the emails. I don't think that
you don't think they care about this?
I don't think the vote, going back, I don't think the voters cared that much about those emails. I think if there's money tied into these emails,
turn on any American network right now.
I'm saying I care and we care, but I'm saying the actual voter and the voter who's going to vote for Hillary Clinton, I don't think that they cared that much.
You don't. No. I get that, but you don't care about those voters right now. You're talking about the 7% of swing voters that are going to decide who the president is. So all of a sudden, when you're talking about a swing state or one that's assumed to be already red or blue, you now have to talk about the margin of error of 7%. And one of the things we've learned about the Brexit vote and the vote in Colombia is these margins of error, assumed to be 3%, are actually more like 7 to 10.
I think what's key and critical is clearly what's in these emails.
That's why. Don't you agree it would be great to get them out? Wouldn't you want, if you were her, you're Hillary Clinton, what do you want to do?
I think, to your point, if there's money involved, I don't think so. If there's a tie of the money.
Yeah, you don't want it coming out.
I don't think I don't know that would be the strategy.
So you think just try and leave it in a cloud above your head, getting voters to say maybe she'll get indicted, maybe she won't?
I don't even think that they'd be thinking that way.
I think before this is over, they'll be thinking. What do you think you're going to do if you're Donald Trump? Did you hear his speech about 18 minutes ago?
I absolutely did. He said he's going to push it as far as he can go. 100%.
Okay, so now let's take part two. Let's assume that this reduces the probability that she's the president. And that now we face, and I don't know, I have no idea. I would not bet today who's going to be president. But let's assume now President Trump wins the election. He's the president. What does that mean to us as Canadians? Let me tell you my concerns, okay? Leaving all the rest of this stuff aside, his policies that I've been focusing on, which were many written for small business, have a 15% federal corporate tax rate. And that really scares me, because if I'm going to set up a new business, even as a Canadian entrepreneur, why would I do it here when I could just go to Buffalo and save 33% tax and not pay any carbon tax? I'm scared for us in terms of our competitiveness, because he's going to make the American tax policy competitive with that of Europe, and we're way off base in Canada. We're raising taxes and raising carbon taxes, and all of a sudden we have a regime south of the border that's going to slaughter us in competitive on tax. That worries me. And now the probability of that happening is way higher than it was 20 minutes ago.
Yes, it is. And so fair to say she's better for Canada. Do you think that she, in her strategy that we're talking about right now, might be to focus more and more inclusively with her vice presidential candidate?
I don't think that's going to work. I think this is an extraordinary situation, and if I were in her camp right now, I would look at extraordinary measures, and I might go against your thoughts and take the chance of just getting it out there and saying, listen, America, I'm still the better choice. Here's what those emails have in them. Here is the content of those emails. Read it. Now, if she did break the law, the outcome is going to happen anyways, okay? She will get indicted. She may go to jail. If it's true that these are indictable offenses that are in these emails, but why not just disclose it? Otherwise, you may give up your chance to being a president in the United States.
Or just before we go for 1 second here, the other side of it, which we've heard other people on the show today mention, is that this could be Comey, the director of the FBI, just wanting to make sure he's protecting himself. If they've got new emails, they kind of have to tell the lawmakers. It could be that.
Okay, then disclose them. Then actually shine the light of transparency, put out the content tonight, and that way the whole American voting population and the Congress itself. Remember, he has a mandate. His mandate is to disclose material information when it affects anybody that's an elected official. And this sounds like, why would he reopen it if it was not material? Tell me why. There's just no reason. So he would have said, this is not material. It's the same I discussed in July. This is a big deal. And it's not going to end well if it is materially. If she's indicted, this is not good.
We'll go to the news, and when we come back, Scotiabank's chief FX strategist Sean Osborne discusses why Stephen Poloz, governor of the Bank of Canada, is adding volatility to the loonie. Stay with us, folks. You are listening to 580 CFRA.
Now back to Money Talk on News Talk 580 CFRA.
Our first guest says Stephen Poloz is adding to the uncertainty and the volatility in the Canadian dollar. For more, off to the TSX Broadcast Center and Scotiabank's chief FX strategist, Sean Osborne. Sean, good to have you with us.
Good to be here, Michael.
As we see, we don't need that output gap closed to raise interest rates, but so many other things need to fall into place before this can happen. What isn't happening right now?
Well, I think the Canadian economy is essentially a sort of two-trick pony at the moment. We've been highly reliant on consumer demand, essentially housing and consumers here in Canada to keep the economy moving. And even those sectors are looking a little bit stretched at the moment. We haven't seen the rebound or the rotation away from that towards trade and investment that the Bank of Canada has long been waiting for to signal a more sustainable growth path moving forward. So we're on a fairly weak footing here, I think, essentially is the key issue, and there's no real sign that things are going to change anytime soon.
And because we've been trying to shift from that energy-driven economic growth to manufacturing-driven economic growth, by the time we're 18 months out from now, as the Bank of Canada is projecting, what does our economy look like to you?
Well, we think it's probably going to be in fairly slow growth mode over the next little while. We'll probably lag a little bit behind the US. We think the US will probably be growing to around about just over 2% in the next year or so. Canada will be somewhere close to that, but lagging a little bit behind. So we are in a generally slow growth environment, and we're not going to get back to those heady growth rates that we saw in the immediate aftermath of the Great Recession anytime soon, certainly over our forecast horizon.
So with that in mind, do we get back to the idea that the Bank of Canada may need to cut the overnight lending rate again?
Well, I think that's kind of been the source of some of the volatility we've seen in the CAD and perhaps in the bank messaging. It may be the messaging, or it may be the market is not listening correctly. But I think there was a sense that from the bank's messaging recently that there was a chance that we would see another rate cut. That the rug was pulled out from that, apparently, by some of the bank's additional communication following the NPR this week. But I think in terms of market pricing, there's probably roughly a 20% chance of a rate cut over the next few months priced in at this point. I don't think it's 100% certainly that we'll get a rate cut, but the chances of a rate decrease in Canada, I think, are probably higher than the market is pricing at this point. A lot needs to happen, I think, to get us to a point where the Bank of Canada decides that it needs to provide more accommodation. And part of that story is in the US, part of that story is here in Canada. So a lot of moving parts to the equation, I think, at this point.
One of those moving parts seems to be that the Canadian dollar seems to be moving more on the probability of a rate cut or increase by the Americans versus what we traditionally talk about when we talk about our petrol currency, the price of oil.
So there's been a lot of focus on the apparent sort of de-emphasis on the correlation between the Canadian dollar and crude oil prices, and the heightened focus on interest rate differentials as a driver of the Canadian dollar in the short run. I think that's valid. I think the two together are still very important. It's certainly in terms of trying to assess a short-term direction or fair value for the Canadian dollar. We look at both those variables, but it's fair to say, I think, that the Canadian dollar has not necessarily become detached from crude oil prices, but is perhaps paying a little bit less attention to it than we're used to seeing normally, and certainly paying a lot more attention to, on the one hand, the potential for the Fed to raise interest rates. We think that's going to happen in December after the US election, and with spreads widening out to around about the 30 basis point area at the 2-year sector of the curve, that also factors in the small risk perhaps of a rate cut in Canada as well.
So if the Americans pull the trigger on an interest rate increase in December, I can imagine that pushes up the value of the U.S. dollar, pushes down the loonie. But I can also imagine we are going to see some volatile times in the month of November as well. Does the election factor into the near-term outlook on the loonie?
Well, we're not factoring in any particular outcome into our near-term forecast. We'll just wait and roll with the punches when they come along. I think it's safe to say, though, that the markets are probably paying close attention to the opinion polls in the US at the moment, and fairly comfortable with the idea that, as the polls indicate, that Hillary Clinton may win. The alternative would be a surprise. A Trump win would probably engender a little bit more volatility, probably in the short run, quite a bit more volatility, just because it's not factored in or has been factored in as a potential outcome for the markets at this point.
How comfortable are you with the growth trajectory of the United States going into 2017-18?
Well, we'll get a bit more information on that later this week, with the Q3 GDP numbers. We expect slightly better growth, certainly in the third quarter, than we saw in the first half of the year. The first half of the year was, quite frankly, very disappointing. The first quarter of the year, typically in the US, gets off to a fairly slow start, but we generally see a bit of a pickup in the second quarter. That was absent this year. So we're hoping for better news on that front in the third quarter, and certainly in terms of the handoff into next year, growth hopefully north of 2% and maybe somewhere closer to 2.5%.
John, always great speaking with you. Thank you for your time.
Thank you.
John Osborne is the Chief FX Strategist at Scotiabank. He joined us from the TSX Broadcast Center.
Now to Satish Ray, Chief Investment Officer of Public Markets at OMERS.
Well, Capitalize for Kids is a conference that brings together some of the world's most prominent investors to help solve some of the toughest challenges, specifically with children with respect to brain and mental health issues. We're going there now. Joining us live, Satish Rai, the Chief Investment Officer of Public Markets at the Ontario Municipal Employee Retirement System, or OMERS, as you'll know it. Satish, thanks so much for joining us.
Well, thank you, Amber, for having me today.
So you're in charge of the public part of the OMERS investments, and it's about 50-50 split between public versus private.
Right.
Last year, private was kind of the area that we saw gains, as it was tough to eke it out in 2015 on the public markets. How's 2016 shaping up?
Well, actually, within the OMERS portfolio, the public assets this year have performed very well. Our returns are north of 7% year to date. We've seen gains throughout our portfolios from fixed income, credit, from some of our high quality blue chip equities, and also some of our relationship investings. They've all kind of formed this year to provide us very strong returns.
So that's interesting that you talk about fixed income and equities as kind of the key drivers. Is one giving you more leverage than the other? And when you look forward to the end of the year and next year, which one relatively are you assigning a higher weight?
Well, I think the biggest challenge that we face is that in the next couple of years, the fixed income traditional government bonds are unlikely to meet the liability stream of anybody that's looking for a safe retirement income with yields around 2%. So our base view is that high quality corporate debt will provide a very good rate of return. We believe that the equity markets that are generally linked to slightly higher growth will also perform well. So the base case that we're looking at is that in the next couple of years, economic activity in the developed worlds will be stronger than it has been for the last couple of years, a little bit stronger. We think that inflation, which has been very low, will actually tick up a little bit, again providing a little bit of relief for the financial markets. And that will generally mean that the fixed income markets which have given us coupon and capital gains for a number of years, will most likely give us coupon at best for the next couple of years, and that really links to about a 2% rate of return.
Satish, just to follow up on that and talk more specifically about stocks, the reality of what you can get in the bond market has pushed a lot of investors into stocks with healthy dividends. That was a story certainly in the early part of the year. You did start to see some of that money coming out and maybe going into more growth-focused stocks as we move through the year. Given your outlook for the economy and you think about the kinds of equities you want to be invested in 2017, are you thinking more along the lines of some of the perhaps beaten up growth stocks, or are you thinking dividend stocks are the place to go?
Yeah, so within the OMERS, we actually don't shift our focus on equities based on some short-term trends. Our focus has always been companies with dominant market share, solid balance sheets, companies that pick up market share during down markets, and actually have our number 1, 2, or 3 in their category in the space to actually compete in. That's the lens that we look at, not necessarily is it a dividend focus or growth or some of those areas. And the reason we do that is we feel that those characteristics are the ones that we're looking for to align our liability stream. So if you think about the global franchise names, those are perfect matches for a pension fund's liability stream. That said, on the short-term basis, what you are seeing in financial markets is that equities that are linked to slightly better growth are doing better. I think this shift in fixed income away from, in certain areas, from negative yields to positive yields is a very important sign for investors. It means that investors that have been running to fixed income market because they've been scared of equities and other classes of fear of very low growth are starting to pull back a bit. And I think that's a very healthy sign for riskier assets such as equities or prefs or some of those other areas. So our focus is very high quality securities that line to our liability stream, and we think that there's a significant change taking place as governments pull back a little bit from the excessive liquidity that was provided by central banks.
What is OMERS doing about the U.S. election? Are you holding steady to the approach that you just laid out, or are you taking kind of a wait-and-see mode and pulling back on some of your investments and sitting in cash?
Well, you know, from our point of view, the U.S. is a very strong economy. It's one of the better economies in the developed world around the world. Our base case is that the U.S. Will do very well over the next number of years. We have lots of very high-quality assets throughout the United States, from toll roads to buildings and office towers. What we think is that whoever wins the election, that the U.S. economy over the next 3 to 5 years will do very well. So our position, we do not shift our assets based on some short-term trends. Our focus is very relentless. But the message that we say is that we think the U.S. economy is a solid economy. We think it can weather whatever short-term volatility that might come from the election. And our focus is relentless on that front. And we think the U.S. is a core part of our balance sheet and will remain a core part of our balance sheet for an extended period of time.
The source of outperformance this year has been Canada. Do you think that that will continue, or would you prefer to be more tilted to the U.S.?
Well, actually, we have a very positive view on Canada because we think that the damage done to the Canadian economy from lower energy prices in Alberta are going to start to dissipate over the next 3 to 6 months, and that you'll start to see better balance in the Canadian economy on a go-forward basis. So where we had this economy, two-tier economy, where the East, Ontario, and Quebec were benefiting and Alberta was suffering somewhat, we think there'll be greater balance within their space. And the second thing is that the Canadian dollar has also pulled back meaningfully, which is very positive for our manufacturing sector. So we actually have a lot of great things going for us as a society. We have low oil prices, which are stabilizing. We have low Canadian dollar. Those are all very good for Canadian equities.
Satish, thanks so much for joining us.
Thank you so much for having me.
Satish Rai, the Chief Investment Officer of Public Markets at the Ontario Municipal Employees Retirement System, or OMERS.
We're going to a final break, and when we come back, Andy Bush, political economist at andrewbush.com. Stay with us, folks. You are listening to 580 CFRA.
You're listening to Money Talk on News Talk 580 CFRA.
Well, joining us now, With more on the FBI probe into Hillary Clinton's emails is political economist Andy Bush. Hi, Andy. Good to have you with us today. Let me get your reaction. What are your thoughts in terms of what actually happened and what we know?
Well, the situation is pretty fluid as we talk. Initially, when the FBI letter was reported out, it had a negative effect on the markets. It was believed at that time, I think, that this was opening up a new probe into Hillary Clinton and the emails. It is not yet. We certainly would like to have the FBI issue some clarification on what they said. But just recently, and one of the reasons why the market's rallying right now is that the New York Times has broken the story that the FBI actually got this new information from an aide to Hillary Clinton, Huma Abedin, who is part of Congressman Weiner's, the investigation into him, her ex-husband. And so it perhaps is more focused on her aide and maybe her aide doing something that was wrong rather than Hillary Clinton. And I think that's why we've seen the market rally. But it certainly is astonishing. And I can't think that I've ever seen anything like this in the United States. I'm sure there's something going way back, but 11 days before an election for the FBI to issue this statement or issue this letter is beyond political. It's shocking what they're doing, and I think it's just a series of missteps by the FBI regarding the Clinton emails, and I'm just not sure that the Secretary Comey, head of the FBI, Comey, is really doing something that's going to help clarify the situation.
So, Andy, that's interesting, newish news that there's another organization reporting that this has more to do with Hillary Clinton's aide who was married to Congressman Weiner, and it has more to do with that. But would that be enough for the head of the FBI to come out with this?
I think it's emblematic of the pressure that Director Comey has been under since he not only testified in front of Congress, but also came to the conclusion that there was no need to move forward with a prosecution of a case against Hillary Clinton. I think the Republicans have been really banging the drum pretty loudly that there were a lot of missteps with this. There's a lost laptop that has all 30,000 emails on it that was never found somehow. And the fact that they did not move forward on this it just looks bad, and Director Comey's come under a lot of criticism for this. Now to do this 11 days before the election just makes it even worse. It just raises a lot more questions. And truly, it's unfair to Hillary Clinton. I know people can't believe I'm saying that, but it is unfair to her to have this roll out right before the election because it looks like it's tipping its hand to helping Donald Trump with his assertions that Clinton is doing things that are wrong, that are illegal, and that she should be locked up for. So that narrative has just gained a lot of force right now. You're going to hear it for the next couple of days. You may hear it all the way to the end of the election. And again, it's just this appears to be a ham-handed way of Director Comey trying to make it look like he's balanced in his views towards this case, whereas in the reality is it just smells really bad.
What do you think her strategy should be, or the Democratic strategy for that matter?
Yeah, I think, clearly she's going to have to come out and address this this afternoon. I think what she has to do is take a look at the letter and just say, look, there's nothing new here. They may have found some new things, but nothing has happened. They're not moving forward on reopening up the case. They're just saying that they're going to look through a few more emails. And I think that's all she can say at this point, because that's truly all there is. But that's not the narrative that's going to get spun from the Trump camp. So you're going to hear this for a while. The market's going to be even more uncertain about it.
We are, but Andy, at the same time, too, I mean, I think that the people who believe in Hillary Clinton believe in her. They really do. They believe in her knowledge, her expertise, what she's trying to do for many groups of people. And the people who support Trump believe in him for completely polar opposite reasons. I mean, that's just what it is. So I really wonder if this news would even sway either parties' potential candidates who would vote for them, or voters, I should say.
Yeah, I think that's a great point. And the answer would be no. I don't think it'll sway those people at all. But that's not the people that this is going to sway and are important for this election. When you look at polling data and you get numbers that Clinton's ahead by 7 percentage points, there's usually about 15 to 20% saying they're undecided. And it's those voters that could be swayed by this, just as the same thing as the voters that were swayed by the hot mic video that came out on Trump. This swings it the other way. And we certainly don't know what other WikiLeaks emails are going to come out as we get towards the last days before the election. But I would just say in my own travels around the country, when people ask me to come speak, and I talk to them, so many of them are in this same camp of being undecided. So I think that's really where this is going to resonate and could potentially have an impact.
You're not the first person who has told me that today, that it's going to be the undecided voter that gets so swayed by this. I don't know that I buy that.
There's just a lot of them, I think, in an election with two candidates that are the most disliked candidates of almost all time.
Maybe.
Anything can sway it, right?
Maybe. We've got to leave it there, Andy. Thank you very much.
My pleasure.
Thank you.
Well, folks, that's it for Money Talk. Thank you for joining us this afternoon. I hope you have a good week. Please join us next Sunday at 2 p.m., and we will try to win the battle for investment survival. I'm John Budden, and you are listening to 580 CFRA.